Just to absorb the growth in the working age population, we need somewhere around 100 to 125,000 per month. So even at the current lower rate of job growth, let's say we're at 175K, just take the midpoint, that's still well above what we need to absorb the working age population. So we're working down the slack in the labor market very, very quickly. And if you do just a little bit of arithmetic, and just assume we stay at 175K, I think we'll do better than that 6, 12 months from now, but let's just assume that we're going to be back to full employment. There's going to be absolutely no slack in the labor market by summer 2016. And in fact, that's the key statistic, I think, what the Federal Reserve is looking at when trying to decide when to raise rates and why December looks like a likely launching point for higher rates.
This Friday, we are looking a little bit below the market consensus. We're looking for 165,000 jobs to be added. The market's currently just above 180. We do think that anything sub 150 could become a little bit problematic for the Fed in the sense that obviously the employment reports they have indicated are very important for their December decision. At this stage, JPM economists still expect that the Fed will lift rates in December. But certainly, as I said, it's these jobs reports which it really hinges upon, and the market will be very, very concerned if something does come in, I think, sub 150, particularly as we've seen short positioning in US Treasuries moving back to sort of 6-month highs on our Treasury client survey. So it does seem to me that the market is now getting on board with the Fed rate hike in December and making these jobs reports, I think, probably a bit of an asymmetrical profile as we come into it. It's really the weak number that's the problem. Strong numbers, though, will just see us continue with market pricing as usual, I'd say.
Definitely. I think this is pretty good news for the Chinese markets overall. I think that when the Shanghai-Hong Kong Connect was established last year, clearly a few weeks or few months after, there was hints at extending this connect to Shenzhen. And I think Shenzhen is really the nest for IT stocks, for SME stocks. And this is clearly good news for the deepening of the financial market in China and for the further opening up of the capital account. So clearly, more professional investors are going to come into the Chinese markets.